So what happened last month? We lost over 66,000 jobs, another 40,000 last 2 months. Now we lost over 100,000 jobs. So unemployment rate is gone up. But the good news is it could be good news, bad news. The good news could be the interest rate, which is going to come up for on September 17th. There are good chances that interest rate may gonna go lower by 0.25%. Again, keep your finger crossed. We never know until we get all the information and data. I'll be sharing some information about you, exactly what the inflation, GDP, and employment information. Though it's important for us to know because it affects real estate in all part of it. So next thing is delinquency. The number of people who are hurting, who are going to be facing power sale or foreclosure is increasing dramatically. Based upon Toronto, it's 1 out of 35 properties. There are about 790 power sales in Toronto alone. So those who are looking into it, it could be a good opportunity in a way. Speak to Randy Goodman. She's the expert in that. She'll walk you through if you're looking for a power sale deal. And she will be speaking with you shortly. RandyGoodman.com is the name, and she's here as well, and she will help you.
Okay, I'm just in a seminar for the next half hour.
Thanks, Ernie. You can unmute yourself. All right. So house prices. Well, we have gone through ups and downs, and these are the sessions. We have a 76, it's lasted till 84, and 9 years in 1989, and 1 year in 2008. Now what we are still going through it, but not it is all across Canada. Eastern part of Canada, when we talk about Atlantic provinces, there is a boom going on, starting from Quebec onward. Alberta is coming along, and Alberta has having some difficulty, but on the whole, is doing well. So how much house prices have dropped? 150,000 across the board or across Canada, based upon information from Canadian Real Estate Association. People will argue that, hey, what happened to Ontario and British Columbia? Yes, we've taken the biggest hit. Ontario and British Columbia have taken the biggest hit. So what happened to the prairies, Quebec and Atlantic Canada? They have done well. Newfoundland is up by 11%. Quebec is about 10%. Saskatchewan is 8%, and so on. But there's not much about saying about Alberta. Alberta is doing okay. So market conditions, yes. Are we doing good? Yes. This is the what we call sales to new listing ratio. It tells you exactly if which way the market is. The market conditions are, hey, is it a good market or bad market? Higher than inventory, the higher the sales to new listing ratio is good news, and less is not that good though. So far, we are doing Alberta 63% and Saskatchewan, Manitoba, Quebec, Nova Scotia. They're all good actually if you look at it. So Ontario and BC, two of the main provinces, are not doing that great. They're declining markets. And I'm sure most of us know about that. So what markets are super hot? Newfoundland, PEI, Quebec. It's about the time. So Toronto condo, that's the nightmare. 50% of approximately, I would say 50% of the listings, Randy can back me up on this one, or she will reiterate, over 50% of the listings on Toronto are condos, and they're not doing that well, and the prices are dropping, and it's difficult to sell in this market, and not that many buyers out there. So why? Nobody wants to buy the condo. Why? It's just that the economy has shifted towards the purpose-built rentals. Now, we can look at the bad news, but we can look at the good news. Good news is purpose-built rentals, huge demand for next 20 years. Federal government is going to give out about $300 billion out. 150 billion is already allowed for next 10 years, and then another 10 years, another $165 billion. So as an investor, we look at it, hey, listen, if I want to invest in sort of a condo, can I buy a lot and build a purpose-built building? And they may can introduce the terminology called MURB, M-U-R-B, multiple unit rental. I think some sort of a, I'm not sure what the B stands for, but it was very common in early 70s though. So power sales are up dramatically, which is foreclosures compared to other part of Canada. It's about 790 as we speak. Listings are pretty high. I'm going to let Randy speak to you about what is happening, but listings are still rising quite a bit. And tenants and the corporate private equity firms. Canada's largest landlord, Starlight. What is that? What is in the game? They are incredibly great landlords, in my opinion, but most of you may have a different opinion. So how many units they own? They own quite a bit of units across Canada. I believe they own about 54,000 units. So what are exactly, why are they in the media? Because they intend to be super fast when it comes to evictions. And they are into renovations and they like to have rental go up according to the market. So somehow they're they're super aggressive when it comes, even if you delay the payment of rental payment, you may gonna get a notice to get out. And they have very, very strong legal team to do that. And the media has picked up on them and they intend to pick up people out, renovate the same places, and they like to rent it at higher price. So this is something which you might have seen it. So what is the opportunity? There is a shortfall of 235,000 rental units in Toronto alone. Well, how much we built? Only 35,000. So we need to build about 725,000 rental units. Great opportunity. And this is going to continue for next 10 to 20 years. Great time to get into multi-units. By the way, we will be doing something special for our members of the club, which could be maybe half an hour to 1 hour, a small presentation. How do you want to invest in multi-units? So those who are members will get to attend it for absolutely free of cost. Nightmare, credit card payments. I think about a couple of $1 trillion are being added up. I think 2.8 or $3 trillion Canadian owe to the taxman. That's the only and one and only product which get advertised the most. If you believe that credit cards get the highest advertised product altogether, wherever you go, if you're looking for a good sponsor, hey, call the credit company. Whether it's MasterCard, whether it's a Visa or Amex, they'll be happy to do that. Unfortunately, the younger Canadians are suffering from it. $2.52 trillion is owned, and they are in trouble, most of them, because of the delinquency. People are unable to make a payment. That affects us all. Foreclosure versus power sale. Some of you got confused. Here it is the deal. The power sale are utilized in Ontario, New Brunswick, PEI, and Newfoundland, and rest of the Canada utilize the foreclosure. It's two different processes. Power sale is very quick. We don't have to go to court. Foreclosures is a long process. Everything has to go through the court and court's approval. Just thought I'd just share with you. Why are they rising? Why are so many defaults? Well, it is we're losing a lot of jobs, unfortunately, and the fear is unbelievable. The tariff is not doing any good for us altogether. So here is another part of Canada. Canada is isolated, and there are a couple of companies who intend to control everything. It's airline or the banks, grocery stores, or telecoms. And that does not give us a break, actually. We need a break. We need some other companies to come in to provide us information. So first-time home buyer used to be in 20s, now in 40s. 40-year-old virgins. This is unfortunate. Unbelievable, but this is how what it is. That's what it is, though. This is becoming difficult. All right. Foreclosures in BC. This is another one, 90 million debt. This is a big one, by the way. This is the luxury condos has gone into big situation. This is supposed to be one of the luxurious luxury condo, but again, it's a receivership, means it's a bankruptcy. It will be sold. So what's happening with Canadians? They're spending about 50% of their total income toward the rent. That is not very good, unfortunately. Uh, Rent each your paycheck, what's left for life? Not much, though. So here's a nightmare. That a bunch of them are going to share some of those. This is something in Toronto. Uh, People have lost $1.1 million. This is not new to it. It is it is happening. And I'm going to be sharing some of the story. As a matter of fact, I posted this morning. I got about 20,000 people looked at it on the Facebook, unfortunately, too. So here is another one in Toronto. Those who are looking for it. It's not a bad deal, by the way. This is a 7-unit building under power sale, which is foreclosure. And it is totally vacant. It has a lot of upside to it. And looking for 5 million for 7 units, in my opinion, it's a reasonably good deal. And it might be difficult to get a financing with CMHC MLI, but it can be qualified though. So those who are looking to enter it, you got extra money and you have some know-how. But it's a nice complex, by the way. Location is great. So here's another one, $2 million loss. $2 million. Do you believe it? In Toronto. This in the luxuries. This is one of the quite prestigious location of Bathurst and Finch. Uh, Nice neighborhood. Somebody bought it with intention to build a bigger house, $5 to $7 million. And I do believe they paid $3 million, which I was little too high. Now this property got just sold under sale for 1 million. They paid three. It is a small period of time. It was not much. They paid in 2021, and it's less than 3.5 years. Two-thirds of the property is gone, disappeared. Well, this is wrong. This is wrong. Okay, Collingwood. This is another one, by the way. This is one of the safest investment. People say, "Oh, I want to go into Blue Mountain." Really? Well, somebody bought a condo for $500,000, selling for $300,000, 40%. Goodbye. And that is the recreational area of, I would say, for all across southern Ontario. And just imagine you're losing $200,000. Yikes. Well, plus all the stuff that we have to pay in Toronto. And I'd like to share information with you just to let you know. So here is my question to all of you. So everybody who is here tonight, I do believe we got a bunch of experts here. I will start with Doug Thompson. So will they deliver the rate cut? All the Canadians are begging for it. Please reduce the interest rate. Doug, what's your opinion on it?
I believe that the rate cut will come because of the fact that right now, as much as I'm involved as you are across the real estate market in all of Canada, there's a lot of people sitting on the fence. There's a lot of buyers that are not actually making a step in the right direction now to actually buy, which is sad. And some of that comes from the realtors actually not actually presenting the case right, so they do buy right now. Because what will happen when the rate does cut, if they cut it, is it could very easily explode the market into a frenzy again, as far as all the buyers coming out of the woodwork. And next thing you know, a price that you could have got for a property today could easily jump by 3 or 4 or 5%. And in some of these prices, as the ones you're showing, that amount of money is a lot of money lost to the client. So the rate cut, I believe, will come, and it's going to affect the market in a positive way, whereas the buyers will come out and things will start to sell.
Excellent. Thanks, by the way. Doug Thompson is one of the best trainer across Canada. By the way, he trained realtors all across, and he's gonna be in Ontario. Actually, he's in BC right now as we speak, but he's gonna be here for a week or 10 days in Ontario. So get in touch with him. And if you'd like to have some information, please, you can text me or you can just put your name and number in the chat. Randy Goodman, what do you think of it? Randy?
Well, yes. Hi, you can hear me?
Yes, we can hear you loud and clear.
Okay, awesome. Okay. Well, the bank has already cut rates by over 2 percentage points, bringing the policy down to 2.75, which is a significant move compared to where we were last year. But of course, lots of us don't feel it's enough. So Trump president has said, with the economy slowing down and inflation under control, additional interest rate cuts by the Bank of Canada could help offset the impact of tariffs. Greater affordability would not only support home sales, but also generate significant economic spin-off benefits. Well, that captures the sentiment out there. Basically, the economy is begging for a bit more relief, and we can clearly see that in the market. Now Macklem's challenge is balancing that need with caution. He doesn't want to cut too quickly if global risks like trade stocks or inflation reappear. So flare-ups reappear. So far, he's chosen a steady path, waiting for more signals before making bigger moves. Forecasts suggest we may see 1 or 2 more cuts later this year, but don't expect a return to the ultra-low interest rates we enjoyed before the pandemic. And this is a new environment, and Macklin has been clear about wanting to avoid fueling another round of excess borrowing. For real estate, the impact is obvious. TREB's August report showed that even with lower borrowing costs and lower selling prices, households earning the average GTA income are still struggling to afford an average priced home. That means the affordability challenge isn't solved by just 1 or 2 cuts. It's structural. So the big takeaway here is, yes, there's a chance of further cuts and they will help, but investors should plan for a world where financing remains higher than it used to be and affordability pressures stay at the forefront of the housing conversation.
Thanks, Randy. David Grossman.
Hi. Okay. So rate cuts, I think a big factor will be the CPI figures, which come out one day before on September the 16th. I'll note that the US is also having their meeting, the Feds, and there's a 90% chance that they will cut their rates by a quarter point. Canada's correlation to the US is usually about 70 or 80%, but Canada will make its decision independently. And those CPI numbers, the inflation figures, which are due the day before, will have a lot to do with it. And like Randy says, quite possibly another 1 or 2 cuts, but there have been quite a few. I think there's been 7 cuts in the last year. So we're way below where we were a year ago and a bit. And yeah, it'd be nice to see a rate cut. I think a lot of people would appreciate it, but we'll see what happens.
Thank you, David. Jerry Hoganhal. Jerry. Vladimir.
It's really interesting because I think it's farther and farther people struggle more and more. And I remember you asked this question maybe like 8 years ago, and very soon, and now 8 years passed, and it's like just starting happening. So it's really hard to predict, honestly.
You're right. It all depends upon, I think, different numbers, the inflation. And I do believe that one of the things which is holding us back is the tariff. Tariff is the key. Ernie Gardy, are you there, sir? Ernie? All right. Well, these are the opinion from different people, and I do believe that interest rate is going to go by 0.25%. There is a possibility of 2 cuts this year, and perhaps another 1.5 or 2 cut next year. I believe it will be a great relief for a lot of Canadians, in my opinion, if the rates come down even by 0.25%. It's going to give a little bit boost to confidence to the Canadians. and the home buyers and real estate market is the backbone. About 13 to 15% of our economy is run by real estate, new construction, so on. The new construction is going up dramatically because of the new rentals, but I believe that a rate cut will be very much appreciated by majority of Canadians. So they're really, really asking for it now. All right, moving forward.
Navtaj?
Yes, Ernie. Okay, go ahead.
Yeah, just on that note, with regards to rate cuts, if people don't have jobs, they can't buy property,
Correct.
and the unemployment rate is going through the roof. We're probably around that 10% unemployment range now in Calgary. And we've had our single family home market has dropped about 8% on the average. So inventories are climbing, and we have under the ML Select program about another 15,000 rental units being completed out this winter. And we've had about another.
So yeah, if you tell me where I'm bringing it,
Okay, I live at, so you're not gonna be able to come yourself, or you don't know yet?
won't be able to make it.
Okay,
You know, I'll be at a
David, can you
rehearsal
mute
dinner
yourself,
until
please?
about 8:30,
Hey,
and then I'll have to fly right to the
David,
beacon.
could you mute yourself,
okay,
please?
gotcha. I'm at 15 Catamaran. Do you want me to text it to you?
David, can you mute
Yes.
yourself,
Okay.
please?
I'll
David,
text it
can
to
you
you
mute
right now.
yourself, please?
Where is 15 Catamaran?
So do you know where the Elm development is? It's on the east end,
Okay.
past the Walmart and also past the
Nav, while they're
couple of gas
talking,
stations with the
Jerry is
Burger
not on
Queen.
the panel. Do you want to let him in?
Sure. Jerry,
Hello?
are you there?
Yeah, I'm
Jerry.
still here. Yeah,
Okay,
I'm
go
still
ahead, Jerry.
here. And so we've seen a massive construction here under the ML Select program with CMHC. And it's just out of control. Rental rates are dropping very fast. And we're seeing a massive oversupply of real estate coming to the market. And on the rental side, and then we're seeing that there's of course more supply coming on from the sales side. So we've had a bubble market here in Calgary. The bubble has burst also, and it's been a little bit more orderly here, and values are continuing to move down. And just on it's amazing how people are reacting. We had the massive net migration coming to Alberta. That's now gone because they can't get employment here. And so what we're seeing is what makes a market breaks a market. And so we had the massive migration coming here, and that's not occurring anymore. And so we're moving to an oversupply of housing here in Calgary. And so the reality of lower interest rates, I hear it from your end of the world there. Interest rates have been going down, and our market has been continuing to go down. And so interest rates are going to have very little impact. And also on the U.S. side, just as a quick note, is that we're seeing as interest rates are going to be dropping on the U.S. side, that the bond market is actually going up, and long-term interest rates are actually going to be going up, which is an amazing phenomena.
Well, let's keep our finger crossed. Thanks, Ernie. Appreciate it, my friend.
Thank you, sir.
Jerry Hogenhout?
Yeah, can you hear me?
We can hear you loud and clear, sir.
Okay, good. Okay, I don't know what happened before that, but yeah, anyway, what do I think about the interest rate? I wouldn't be surprised if it drops a little bit, quarter point. I don't think it's going to have the, of course, there's the concern of inflation, but I don't think it's going to have that big of effect on inflation, because the last time inflation went through the roof, you got to remember we're coming out of COVID. They had printed a gazillion billion dollars to throw into the market. Plus, when COVID relaxed, all the people with savings, because they couldn't spend anything, that money all came into the market. So that certainly caused the higher inflation before. And I think it's time to, as Randy said, when there's no change in the interest rate, people kind of just sit there and wait for something to happen. So I think it's time to send a signal to the market. I don't think a quarter drop is going to impact inflation, and I think the benefits are greater, that people will get off the fence. It might spur a little bit of spending spree, hopefully. But that's my opinion. But I agree with David. The inflation numbers come out just prior to the next rate, and I think that's going to have a big impact. If the inflation numbers are too high, then they probably will sit on their hands, or even raise it. I don't think they'll raise it, but probably just pass on it. So, in my opinion, if the inflation numbers are too high, they'll sit on their hands again for another period of time. And if the inflation numbers are okay, I think we'll see a quarter-point drop, and hopefully we do. And that's my comment on that.
Great. Thank you, Terry. Terry Wallman, are you here? Terry Wallman.
I am here. I'm walking through a park on my way home to get some dinner. How is everybody doing?
Everybody's great. Are you in Toronto or are you in Florida?
I'm back in Toronto right now.
Excellent. What do you think what's going to happen on September 17th when it comes to interest rates?
I don't think it matters what's going to happen. It doesn't matter if he drops it by a quarter point or leaves it the same. One of the gentlemen had commented, there's so much unemployment right now. There's an oversupply of properties because the investors couldn't hang on because their rental revenue wasn't satisfying the uptick in the interest rates, and they're too far gone now. So we have an oversupply. Even though we were supposed to have a shortage of supply, we have an oversupply that's going to last for another year, maybe 2 years, before it tightens up again.
Interesting.
Right on, Terry.
All right, Terry, one more thing I'd like to share, if you'd like to share with us about the situation with Ottawa, where somebody was applying for a mortgage.
Ottawa applying for a mortgage.
For a UK couple from UK.
Oh, that's okay. The identity, potential identity theft, value fraud. So we had actually a call from FinTrack, and we're reporting all this to FinTrack. A borrower comes through and they want to borrow $500,000 or more for the purpose of buying a house. They already own a house. They want to buy a house. They want money in their hands to be able to walk around town and find a house. That doesn't pass muster. They come back through a different broker, and now they want to build an in-law apartment at the back of their existing house. Not interested in that. So they go back to the first broker, who comes back to us, and now the story is they just needed to renovate their house to put it on the market to sell. Well, the appraisal we had shows a beautiful house, absolutely no need for any kind of $500,000 renovation. So we say no. They come back and say, well, really it's to just clean up the house a little bit and pay for our kids' university. Thank you very much. No, the wife supposedly works for a law firm in Ottawa that didn't exist until May, yet the employment letter stated that she's been working there for 5 years, making $168,000 a year. Doesn't wash. So it's just for everybody to be alert to these new attempts at conning lenders, borrowers, brokers. Just be aware. That's all.
Excellent. Thanks, Terry. It's all part of due diligence. If you don't do it, don't skip it. If it sounds good, check it out.
Yeah, if you don't do your due diligence, don't cry to me, Argentina.
All right. Thank you. Appreciate it, Terry. Okay, moving forward with this thing. Well, these were the certain opinions from experts from different angles. And this is the cost of property in Toronto have dropped quite a bit. And I believe Randy Goodman is going to be talking more about it. Those who want to help, please do. Habitat of Canada is building some houses in Caledon. If you have a talent, you got some free time, let us know. You can call them directly, and please help. This is something for community. If you're going to buy some material, you have leftover material, you can donate to reuse and get the tax receipt. If you don't buy some stuff like paint and doors or whatever at fraction of the price, please go to Reuse of Habitat of Canada. They're all across Canada. Just a humble request or reminder for to all. So Jyoti gonna be away today, so we're gonna skip that. And the taxes, look at that. We pay about 42% of all the income, and average Canadian pay about 42.3%. And how can we, as investors or realtor, real estate business, can help to save some tax money, which we don't have to pay? So let me introduce you our guest, Jerry Hogan-Hout. He is a gentleman who has tons of experience. He's one of the only one Canadian licensed in 5 different separate regulated investments. Jerry, does a bear trust make sense? Pros and cons, my friend. Jerry?
Bear Trust. Yeah, before I start, can you see me? Because I can't see anybody. I just want to make
No,
sure
we can only can see your picture.
Oh, because I don't even have an option to turn off my picture or turn on my picture. But
Let me see if you have been transferred. Okay, keep talking. In the meantime, I will adjust it and see
okay,
if I
because like
can.
I combed my hair, I got a nice shirt on. I mean, people got to see me here. I'm kidding. I'm kidding.
Oh,
I'm kidding. I'm kidding.
That's funny.
Look
All
at the
right, I'll
bottom.
keep talking here. I'll keep talking here.
all
Okay,
right.
so anyway, Bear Trusts. Yeah, of course, they do. And the most common time that we see, hold on, join as panelists. Let me just try this. Maybe that's what's needed. Sorry, I'm just
Yeah. Maybe
Bottom
promoted.
left-hand corner of your screen, Jerry. There's a line through your camera.
okay, this is bizarre. There we go. Hold on. So now I'm
You're
I
on.
don't know. Anyway, hold on. There
You
we
can
go.
turn the
So
cameras on now, Jerry. You're in panelist now.
anyway, okay, Bear Trust. So yes, so the most common time that use of a Bear Trust is when we want to buy a property in a corporation, but the lenders, for whatever reason, they want the property in the personal name. So that's quite common, actually. Lenders, for some reason, don't like corporations that much, and they're always kind of encouraging, the property ownership to be in the person's name, certainly for mortgage qualification. And I will say this is a bone of contention with me because I myself, I keep my personal income as low as I can, and I keep all my income in a corporation. But yet, when we go for mortgage financing, the lenders don't seem to give the same recognition to my corporation where the income is as they would on my personal tax return, which again, that's just a little pet peeve of mine. But when these lenders do create that problem, a Bear Trust is a good way, and it's simply an agreement. And it basically means that the property could be registered in the person's name, but the ownership or at least the accounting of that property is in the corporation. If we want it to be there, okay? Because every time that we deal with any type of asset, we're always dealing in our world of accounting, we deal with balance sheet and income statements. So the question always is, where's the ownership of the property and where do we want that income to flow to? And in a lot of cases, the ownership and the income flow are two different entities. So with the Bear Trust Agreement, just for an FYI, that is something that can be registered on title. It is also something that doesn't, a lot of times is not registered on title. It's usually registered on title if we create the Bear Trust Agreement at the time of closing. And the lawyers would create the trust agreement and then register that on title. But there are times that the client should have created a Bear Trust Agreement. So sometimes we're not supposed to backdate them, and better delete that if that's on this video. But if it's a very short period of time, if they close the property, they come to me and they go, hey, and I said, geez, that's, you should have put that in the corporation. If it's not too far from the closing date, lawyers are okay to back that, or, we can backdate that Bear Trust Agreement to the purchase date, so we can accomplish the same thing. CRA, we do give them a little bit of opportunity. If it's not registered on title, they can always question the validity of the Bear Trust agreement. If it is registered on title, I've never seen CRA not accept the Bear Trust agreement. But the caution I do want to say is when we set these things up, the Bear Trust agreements, we are now subject to the UHT, the underused housing tax filings, because we're holding a property in trust. And then we also need to file T3s. And in the old days, we really didn't need to file T3s if there was no income. That has changed. We now have to file T3, which is a trust return for all trusts, whether there's income in there or not. So still a very viable vehicle, depending on the circumstance with the client. And but just be aware that you have some additional filing requirements that come with that. So yeah, we still see them a lot with the Bear Trusts. So that's my comment on that.
Great, thank you, Jerry. Once again, if you want to contact Jerry, he's a CPA. He is himself is a full-time investor as well, and he can help you revise your structure and even help you with corporate tax returns as well if you need to. Thank you, Jerry. Appreciate it. So here is the scenario in Toronto. Not everybody's overbidding. Only less than 1% are overbidding, and 98% are underbidding. So that brings us to our special guest speaker here, my sister, Randy Goodman. She is the award-winning real estate broker, #1 bestseller internationally, done 11 times, 12 times, God knows how many more times. Randy, it's all yours, my friend.
Well, thank you, my brother. Okay, and thank you for having me. Okay, so I'm going to talk about current challenges for real estate investors and their clients. So the first thing to note is that financing costs are still weighing heavily on deals. Even though we've had some interest rate cuts, borrowing is still expensive compared to what most investors were used to before 2022. This means underwriting is tougher, returns are thinner, and people are being much more selective about where they put their money. At the same time, the market is showing some conflicting signals. According to TREB, August sales were up 2.3% compared to the same month last year. That sounds encouraging, but it came alongside a much larger increase in listings, up nearly 10% year over year. More choice for buyers has meant downward pressure on prices. The average GTA selling price fell over 5% compared to last year, landing just above 1 million. So what does that tell us? Investors are facing a market that is active but cautious. Deals are happening, but buyers are negotiating harder and taking advantage of the inventory buildup. Another layer of the challenge is around where investors want to be. Traditional office space continues to struggle with high vacancies, while industrial, data centers, student housing, and purpose-built rentals are drawing more attention. Investors are reallocating capital towards these resilient asset classes because they see demand stability. And we can't forget climate instability risks. Flooding, wildfires, and rising air insurance costs are now part of serious due diligence process. There's even a new international due diligence standard designed to measure climate resilience in real estate. That's how central the issue has become. So, higher cost of borrowing, a market with more supply than demand, shifting asset class priorities, and growing ESG considerations. These are the realities shaping investor decisions today. And as advisors, we need to help clients navigate them with both caution and creativity.
Thank you, Randy. Appreciate it. Once again, randygoodman.com is she's the #1 real estate broker. When it comes to Ontario, she can do deals all across Canada. I do believe she's also handling a shopping center in Alberta. Is that correct?
Yeah, it's the retail, storage, vacant land, old hotel. Definitely. Talk to me if you're interested.
Yeah, please speak to her directly. Her cell number is 647-284-7601. randygoodman.com is the best way to contact her. Thanks, Randy. Appreciate it, my friend.
Thank you.
All right. So I'm going to move a little bit towards, we're going to skip this one, sorry. We're going to skip this one too, and we're going to move into something a little bit more about Calgary. Calgary prices, we already have heard Gardy. He'll give us a bit of information. I'm going to be talking a little bit more about it. And this is what we are expecting. That interest rate to drop by 2.5% on 17th, and hopefully another interest drop by December. And we're hoping that in next 2 years or so, the interest rate do drop. But let's see if the rate stay steady or whatever. So whenever we're talking about interest rate and mortgages, let's bring our expert. And our expert is David Grossman. And he's going to be talking tonight about how to choose short or long-term mortgage in this environment. David, it's all yours.
Thanks very much, Navtaj. So short or long-term mortgage, most people are going short-term. It's becoming more popular. It has been because, it's been a declining rate environment. And people are hoping that maybe rates will go down further. It's a bit of a gamble. There's some incentive out there to choose fixed rates, like a 5-year fixed, for example. But most people have been going with short-term money in the last little while, either with a 1 or 2 or 3 years, and sometimes a variable rate mortgage. Prime is at 4.95. So, if you can get prime -1, you're just down below 4%. So if you can get it, it's attractive. But mortgage lenders are keen to lend. Your rates are better if you have less than 20% down. It's if it's insured mortgage. But all options are out there, and happy to help. If anybody has any questions, give me a call at the number on the screen.
David, got a question for you. A lot of people are in the same dilemma as most of us. Should we go 3 year or 5 year? What would you recommend to majority of average homeowner or investors?
Well, again, I mean, it really depends on your risk tolerance, and it's not a huge difference either way. But if it's something, if you're somebody who's very low risk, you and you just don't want to, you can afford comfortably to pay the 5-year fixed rate, then lock it up, and you don't have to think about it for 5 years. On the other hand, if you're a bit of a risk taker, you can consider shorter term rates, whether it's 1, 2, 3 years. There could be some savings there, but we don't know really where rates are going to be at when your mortgage matures, whether it's going to be higher or lower. Nobody really knows that for sure.
Right. Well, the best thing is to consult David Grossman directly, one-on-one. Call him directly at 416-876-2031. Rockyourmortgage.ca is the website, and please contact him. He'll be happy to help you. He's been around for a very long time, the most reputable mortgage broker in Ontario. Thanks, David. Appreciate it.
Thank you. Thank you very much,
Okay.
Navtaj.
So we're gonna have what gonna happen? Oh my, come on, go back. So what happened when you miss a one mortgage payment? One mortgage payment. This is where the nightmare begins, by the way. One missing mortgage payment could be a nightmare which can last for a long time. Please don't make every possible arrangement to make a payment. One is go to credit bureau, forget about getting a renewal from a bank. You're going to be dealing with the private lenders or so on. But again, speak to David Grossman, say, hey, listen, if I'm facing this thing, what should I do? Can I make partial payment? Can I extend the amortization period? What can I do? Can I have skip a payment plan or add something to it? Please, with all the respect, do not ever miss a mortgage payment because the price you pay is unbelievable. So our good friend, she's away today, Shelly Hagan. We'll be seeing her definitely next time. She just called, go big or go home. But she's traveling. We'll look forward to see her on October 14th, by the way. So here is another deal what's happening to, as I mentioned earlier, oh boy, Brampton. the number of delinquency when it comes to property taxes. It has gone 400% compared to 2023. This is the information we got from the City of Brampton website to make sure that what we are saying is correct, in case you want to verify it. And I believe it's about $150 million for deficit, or not deficit, or delinquent payment. So there is a process for it. They're going to send a bailiff to collect the money. So if you happen to be in Brampton, you happen to be a landlord, if you didn't pay the property taxes, don't be surprised if you hear from the bailiff. It's a process. It takes up to 3 years before property goes under a tax sale. Just thought I should let you know. So how do you turn into single family home to multi-unit? What this blueprint is all about? We'll be giving it definitely an exclusive an-hour seminar at no cost to all pre-Canada members only. And those who are interested, you will get invitation. And those who are not might be paying for it. Just thought I just shared with you. So this is something which is misconception. I do believe that not everybody is good. This is a big article. The property got 12 different offers. This property was in Beaches, based upon its all media hype. Unfortunately, a lot of media hype actually. There got 12 offers, but property got sold at fair market value. So just don't get into it. We call clickbait headlines fools you. The media sells the hype, the data will tell you all the truth. Just thought I'd just share with you. So this was another wake-up call that was in Vaughan. By the way, they lost 30% of the value of the property. This happened on August 19th, by the way. Beautiful, about 2,800 square feet of a house. And it has a basement apartment in it. Unfortunately, people can't hold on to it. Just thought I'd just share with you. So talking about Alberta, I would like, I want to ask if sorry, come on. Ernie Gardy, are you there, my friend? Ernie? Ernie Gardy.
Yeah, I'm here.
Okay, so are you able to see the screen?
Yeah.
All right. So this is what's happening in Alberta, and Calgary numbers are slightly higher than compared with the whole Alberta. The unemployment rate is much higher in Calgary.
It's very high in Calgary, and it's continuing to go higher. There's it's just the reality of what's going on. We also are foreseeing that there's, because of the massive amount of construction this winter, we estimate probably about 50,000 people are involved in construction. And as things get completed out here under the ML Select program, where you have about 15,000 units completing out, that we anticipate that there's going to be a massive number of people in construction unemployed as we go into winter, into next spring.
Well, that's why the headlines are in Alberta is calling unemployment is waiting. Is that, can you relate to that?
Yes, we can. Yeah.
And welcome to Calgary, always recovering. Going back in 83 when we lost 128,000 jobs at one time.
Correct. Of course,
does that bring the memories?
Yes, it does. Yeah. It brings back memories, of course. I was living in Woodbine, and I was the only house that had the grass cut on the whole street. The rest were foreclosed on.
All right.
But so I don't see that happening again. But that's just.
Here's another deal. In 17 years, no appreciation whatsoever on Cranbridge Heights in Southeast Calgary.
No, that's incorrect.
Okay, well, this information I got from the data, by the way.
Right.
Okay. The property got sold in 2008 for $870 and recently got sold for $867 after 17 years.
Well, the market has pulled back some, but it seems kind of unusual as to what's going on with this one.
Do you remember in 2008? I think we met maybe earlier or so. In 2008, there was a bit of a boom in Calgary, correct?
Correct. That actually is more specifically in 6, and then we had a bit of a bounce again in 7. And as the financial crisis started to unfold in the U.S. side, we started to see real estate values also start to drop here in Calgary.
Well, based upon information I got all together, and this is what it is, this one, and somebody just sold their house, keeping for 17 years, and lost maybe a couple $1,000. 17 years. Most probably built a lot of equity there.
Yeah. Now, you have to recall also, and I would say that you're looking at a spiked price in 2008, just like the spike prices in 2021 into 2022 here.
Right.
And so this property may have sold at the absolute peak in 2008 before the 2008-9 meltdown.
Right.
And 17 years later, or however many years later, we don't know if that particular house was maintained at all, has completely fallen into a disrepair, what the state is of it. So it's, again, these advertisements, these marketing tools by different people to excite the readers. It's you got to take it with a grain of salt.
You're right.
That is correct, Terry. And Terry, the reality is the market in Calgary over a 3-year period increased 50%. So that would include, whether it be houses or just simply land, etc. We see a massive increase, and now, of course, we've had a bubble market, and our market is pulling back. We recognize that, and as I said, on single-family detached houses, the average price has moved down from a high of $850. We're now running at $780. So we've dropped about 8% in the last few months.
All right. Here's the next deal I'd like to share with you, and what happened here in this scenario here. This is in Northwest Alberta, Calgary, Northwest, on 36th Avenue.
Correct. Yep.
And the property got sold. They bought for $800,000, sold for $650.
That could happen. Yes. That looks like almost like a Silver Springs address there, just offhand. And yeah, that could happen.
All right. And a couple of other things. The reason I'm bringing all this, I do believe the market is softening up in Alberta, and a lot of properties are on default. I'm getting average about 3 to 4 calls a week, or sometimes in 10 days, but 5, 6 calls from people suffering and facing foreclosure. Foreclosures are rising in Alberta based upon the number of calls I received. This is my personal experience, though.
That is correct. That is correct, Navtaj. That is correct.
Next thing I want to, so this is another in High River. And this is they bought the property for $280, and recently they are asking for $257. That is after about 18 years.
Yeah, that's a townhouse in High River, a stacked townhouse. It's that those values had gone up, and they're going back to 2007, and that's actually can be somewhat portrayed. It seems a little unusual. 2007 was a boom in the Alberta marketplace at that time.
Right. Isn't it the town, the High River, where they have mostly meat plants, all those Alberta beef?
Yeah, they do. They have the meat plants there, and they also had the flood. They had a very severe flood,
Right,
which impacted the High River market.
All right. The next one I do believe I'd like to share with you. This is another one in Northwest. This is another piece of property. They paid 2023 $840. It recently got sold for $780. This is they hold on to the house for 2 years. The reason I'm bringing all this to your attention, because I need to be working with you shortly. The number of calls coming in, some of these situations can be saved. They don't have to go through foreclosure.
That is correct. The foreclosure process in Alberta is very long, And if there's that deemed equity to be in the property, it goes to the Court of King's Bench.
Right.
So paying $840 in 23 and selling for $780 is about right today. That is correct.
Yeah. You remember that we did I did the trading with a bunch of you guys and took you to the court in 2007, 8?
In that range, right?
Yeah.
That process has now changed. We've been trying to access in through the court system, and they have now made it extremely, almost impossible to get lists and so forth through the court system in Calgary.
Yeah, but our approach is when people call us in, they say, I'm behind, and I received a notice, and I got a call from the lawyer, and so on. So these are the calls we're getting, and ask them a question, what's going on? They say, we are 3 months behind, we lost our job, but the job we had doesn't exist anymore, and we're moving back to Alberta, we're moving back to BC or Ontario or East Coast, and those people are in trouble. They were in because they say Alberta is calling, and now they're finding, they don't have a job there.
That is correct. We'd love to hear from those people. We'd handle that just fine.
Excellent. This was another foreclosure in High River. That was that's 5-6 months ago. Just thought you might be aware of it. I didn't get information if it gets sold. All I know it was under foreclosure though. That is on Northwest and 36th Street.
That's in High River, is that correct?
Right.
Okay, and that's a multi-unit building.
I believe it's a single family home.
Okay. I don't see an address here or anything, but
I'll send you if you like, I will send you the screen.
Okay, you bet. 36A Street Northwest. Okay, I see it here. Yeah, that'd be awesome.
All right. Well, my question is, what's killing Alberta's value? What's killing the Alberta's market right now? If you have to say in 1 or 2 sentences.
Well, we had a bubble market, just like Toronto did, and also just like Vancouver did. The bubble has burst; it's over, and we had a massive amount of migration come to Alberta, push the market right through the roof, and now that's all gone, and reality is setting back in, and that's just that's just the reality as to what's going on. We were, and also on the job front, we were short of people. Then we became full of people. Now we have too many people, so we can't provide employment for the people that are here.
All right. Thank you so much, Ernie. Appreciate it.
My pleasure.
All right, we're gonna skip some of them, and there's something some of you might be aware about Constance's strategy. It doesn't matter. Don't ever try to time the market. The market will change. You can cover it if you have a lot of patience with it. This is the ultimate strategy. Some of you might have seen this show. Costanza strategy, it works every time. I want to wrap it up. Those who are looking into free consulting, free coaching session, please text us this number, 416-409-7300. The time is up, 8 o'clock. We want to say sincerely thank you very much for everybody for being here tonight. And we look forward to see you on October 4th. Thank you, everybody, and good night.
Thank you.
Thanks, Nav.
Thank you.
Thank you very much.
Thank you.
Thank you, Uncle. Thank you.
Thank you, everybody.